Hey, it's Tom here and welcome back to the channel. Now in this video I want to cover some of the recent news out of Warren Buffett's Berkshire Hathaway around the biggest kind of private deal that they've done in several years. They recently made an offer to acquire Alleghany, which is a publicly traded insurance company, but also has some smaller operating businesses as well. So I want to cover some of the news out of Berkshire around that deal, what Alleghany actually does, the price or the valuation that Berkshire are looking to pay, and then I also want to kind of put that in context of the broader picture at Berkshire Hathaway. There's been a lot of news articles and things come out recently saying that, you know, this is Buffett's biggest deal in years, and I just want to give that a little bit of context because personally at least I don't think it's quite as large an acquisition as people are maybe making it out to be. So if you enjoyed the video, please hit like. If you are new to the channel, I would really appreciate you subscribing if you enjoy this content as well. But without further ado, let's get straight into the video. Okay, so let's start off with the press release that came straight out of Warren Buffett's Berkshire Hathaway. I will leave a link down in the description below to this press release if you're keen to check it out. I won't read the whole thing, but I'll give you some highlights from this news straight out of Berkshire. So it's titled Berkshire Hathaway to acquire Alleghany Corporation for $848.02 per share in $11.6 billion transaction. And kind of the three key points right at the top of this press release. All-cash transaction provides significant premium, delivering substantial and certain value for Alleghany stockholders. Strong strategic fit between Berkshire Hathaway and Alleghany and its subsidiaries will continue to operate as an independent entity with increased capital strength and support from Berkshire Hathaway. The press release goes on to say the transaction, which was unanimously approved by both boards of directors, represents a total equity value of approximately $11.6 billion. The acquisition price represents a multiple of 1.26 times Alleghany's book value at December 31st, 2021, a 29% premium to Alleghany's average stock price over the last 30 days, and a 16% premium to Alleghany's 52-week high closing price. Buffett said, Berkshire will be the perfect permanent home for Alleghany, a company that I have closely observed for 60 years. Throughout 85 years, the Kirby family have created a business that has many similarities to Berkshire Hathaway. I'm delighted that I will once again work together with my longtime friend, Joe Brandon. The transaction is expected to close in the fourth quarter of 2022, subject to customary closing conditions, including approval by Alleghany stockholders and receipt of regulatory approvals. Alleghany will continue to operate as an independent subsidiary of Berkshire Hathaway after closing. Mr. Kirby, who controls 2.5% of Alleghany common shares, intends to vote his shares for the transaction. Now, the more digging that I look to do into Alleghany Corporation, which I hope I'm pronouncing that correctly. I've watched a few different videos and listened to a few different podcasts, and I've seen several pronunciations of Alleghany, but hopefully I've got that approximately correct. The more I dig into Alleghany and this acquisition that Buffett has done, the more it kind of just seems textbook Warren Buffett, textbook Berkshire. So Buffett obviously has a long history in insurance. Alleghany has some operating business kind of subsidiaries, but largely they are also an insurance company. They have created value for shareholders over a long period of time. If you look at their stock charts simply, they seem to have grown the wealth of shareholders pretty much in line with their book value growth. I'll put up some charts here around book value growth, and of course Buffett talked about paying about 1.2 times book value to acquire the business. So he's bought something squarely in his circle of competence. He, we think, has paid a reasonable price, which I will get to that in a second. It seems like with pretty much every other acquisition he's ever done, he also intends to allow Alleghany to kind of run their own lives, leave present management in place and so on. And, he's able to continue to compound Berkshire by adding new businesses that really fit the culture of Berkshire well. Now, a little bit on Alleghany's business, and then I want to also give a few thoughts on the price that Berkshire paid as well. So if you go to Alleghany's website, they've got a page there called Operating Companies. And on that webpage, it tells us that basically Alleghany have a few different insurance subsidiaries working in a few different areas of insurance. So they have TransRe, which is a reinsurer, as you can probably tell by the name. They have RSUI, which it says is a leading underwriter of wholesale specialty Insurance based in Atlanta, Georgia. And they also have Cap Specialty, which again is kind of a specialty insurance company for small business. Now, the final subsidiary that Alleghany list is Alleghany Capital, and this is perhaps where it starts to get a little bit Berkshire Hathaway-esque. Berkshire obviously has this huge core of insurance businesses, but they also have several subsidiaries in a range of industries that they've acquired over time, largely using the cash generated and the float generated from their insurance businesses. And looks like Alleghany are perhaps doing something similar. They're not only investing in traditional assets like a insurance company generally would, like stocks and bonds, but they also seem to be acquiring operating business. So just to list a few, they have Precision Cutting Technologies, RC Tway Company, a manufacturer of custom trailers and truck bodies, WWSC Holdings, a structural steel fabricator, Wilbert Funeral Services, I won't have to explain too much about what that business does, Piedmont Manufacturing, a provider of injection molded and thermoformed parts and multi-component assemblies for OEM customers in the industrial, commercial, transportation, recreational, and medical end markets, and a handful of other subsidiaries that they kind of list, again, across a few different industries. So again, the more and more I kind of read about Alleghany, the more it seems to be a little bit of kind of a baby Berkshire Hathaway in many ways that Berkshire has gone out and acquired. Now, in terms of the price Berkshire paid, so Buffett lists paying a multiple of about 1.26 times book value. A multiple of book value is a very common way of valuing insurance businesses. Now, I'm no expert in insurance by any means, but I'm reasonably familiar with kind of valuation methodology for those companies. And there are a handful of different types of businesses that you'll tend to value on a book value basis, as opposed to, you know, a price to earnings or something. If you were to use a basic multiple, of course, Buffett will tell you that the value of any business is the present value of its future cash flows. But, you know, there are some basic multiples that people tend to use in different industries. And an insurance book value is kind of the multiple of choice. Now, the reason for that basically is if an insurance company wants to grow, they tend to require more financial assets. They tend to need a higher book value. If you were to look at a company like Apple or Coca-Cola, where a lot of their value is largely intangible, it's brand and so on, they don't necessarily need huge amounts of equity to continue to grow. But at an insurance company or a bank or something, you certainly do need to grow your book value kind of in line with the general growth of your business. So I will put up some charts here of what that book value growth has looked like at Alleghany, and I will also put up the kind of typical multiple that Alleghany has traded at in terms of its price to book. Now, I guess a general sort of starting point for valuing some of these businesses would be simply 1 times book value. So you're kind of paying 1 times the equity in the business, but you can certainly move maybe down from that a little bit if it's a kind of a poorer quality business, and you can certainly move up from that, which Buffett has done in this case. And the main reason that you would really want to kind of move up or down in terms of a multiple of book value is really to do with the return on equity that they generate on that book value. So if they are a really high quality business that has a certain amount of equity or a certain amount of book value, but they earn exceptionally high returns on that, you can certainly make sense of paying a higher multiple of book value. It would be a little bit like purchasing a bank account with $100,000 in it. The typical person might turn up and say, okay, I'll pay you $100,000 for that bank account with $100,000 in it. But if I said to you, actually, this is quite a special bank account and it earns 15% per year rather than, 1% or 2% like you might get in a typical bank account, you may well be willing to pay a premium to the actual cash that kind of sits in that account. It works in kind of a similar way with value in these insurance companies. And the return on equity actually at Alleghany has been pretty lumpy over time actually. Again, I'll put up a chart here of the last several years, but it seems to be kind of fluctuating in and around maybe 8 to 10% per year. So Buffett clearly thinks that they can earn an above average return on equity over time at the business, and he's been willing to pay a little bit of a premium to book value to acquire Alleghany. And again, it may not be entirely that simple, the analysis, because Alleghany isn't purely insurance. They have these subsidiaries as well, and they may well be worth a big premium to book value as well. Now, the final point I want to touch on in this video is just a little bit around basically how significant of an acquisition this is for Berkshire. You know, I was looking up kind of some CNBC articles and things this morning, and it said, I found articles saying things like Berkshire to buy insurer Alleghany for $11.6 billion and Warren Buffett's biggest deal in years, and making it seem like it's a huge acquisition. And for pretty much any other company, $11.6 billion is a lot of money, but Berkshire is so massive that I don't think it's as significant an acquisition as people are kind of suggesting. So I'll put up the balance sheet of Berkshire Hathaway here. So this is from their annual report that just came out very recently, and it's giving us the balance sheet as of the 31st of December 2021. Now, if we look in a couple of different areas of the business here, we'll see that in the insurance and other assets, they have $85 billion in cash plus $58 billion in short-term treasuries, which effectively is kind of a cash alternative at Berkshire. And then in the railroad, utility and energy business, we have an additional about $2.9 billion in cash. So if you add all three of those sections up, you get to about $145 billion in cash. And Berkshire has just acquired Alleghany, as we covered, throughout this video, for $11.6 billion. They've currently got 145, or at least they did at the end of December. They're about to pay 11.6 for Alleghany, and they're still going to have a huge pile of cash left after that. Realistically, Berkshire have said they will never get below around $20 billion in cash. That's something they said a while ago, but even if you lift that to say $40 billion that they never want to get under in case they have big insurance claims or something, it still gives them a massive amount of breathing room in terms of cash on the balance sheet. And in terms of where this acquisition sits in terms of maybe some rankings or some comparisons to other big investments, again, it's a reasonably substantial investment for Berkshire in terms of a wholly owned subsidiary. But you have to remember that Berkshire don't just invest in wholly owned subsidiaries. They also invest in public companies, which they have done in Alleghany, but they've bought the whole thing. They will also, acquire small ownership percentages in much larger public companies, like Apple, for example. They have about a 5 or 6% ownership in Apple. They've owned Coca-Cola for a long time, and they've got a huge range of investments. So they will buy wholly owned subsidiaries. They will buy, small fractions of businesses through the stock market and be sort of a silent partner of those businesses. And more recently, they will also return capital to shareholders through things like share buybacks. So I will put a chart up on the screen here that I've just put together this morning. These aren't necessarily all of the massive acquisitions that Berkshire has made, but they are certainly some of the more well-known ones. And you'll see that Alleghany is actually going to be a fair way down the list in terms of acquisition size at Berkshire. So it may surprise some people to hear this, and I've made a video on this before, but by far and away the biggest acquisition Berkshire have ever made is themselves, their share buybacks. If you want to look at that as an acquisition, essentially they're buying out their partners, they're buying out other shareholders. So I kind of view that as an acquisition. It's a use of capital where Buffett was stacking up his range of alternatives around buying a business versus buying back shares, and he clearly saw buybacks as a good way to go. So the buybacks for the past 5 years are now up to $58 billion. We have a couple of acquisitions around the $30 billion mark, so the cost basis for Precision Castparts is about $32 billion. It's actually $37 billion, including some debt some net debt that they took on from Precision Castparts as well. I've put some notes, as you'll see on the screen here, but Precision Castparts around $32 billion, Apple around $31 billion, Kraft Heinz 28, Burlington Northern Santa Fe was 26, and he actually already owned a big chunk of BNSF, so the 26 is just buying out all the other shares that he didn't already own. Genre was 22, Bank of America was 14, his recent Verizon investment was about $9.4 billion, and Alleghany is sitting there at about $11.6 billion. So hopefully that just gives a bit of context around the size of this investment from Buffett. $11.6 billion is a lot of money for anyone, even Warren Buffett, but it's definitely not a massive kind of needle mover for Berkshire. It's not the $30 billion, the $50 billion, the $70 billion kind of, elephant type acquisition that he's been looking for several years. So that's really all I have for this video. Another really interesting move from Warren Buffett's Berkshire Hathaway. It seems pretty much textbook Buffett. He's bought something squarely in his circle of competence with an insurance company. They seem to have a pretty similar culture to Berkshire from what I can gather as well, with a long history of pretty similar shareholders, like a family-run business that's had good results over time. He's paid a reasonable price for it, and he's going to basically let that subsidiary kind of lead its own life. He doesn't intend to do any kind of activist type, throw out top management type stuff at the company either. So interesting acquisition, and another seemingly nice business to fit into the overall Berkshire family. So I do hope you enjoyed this video. If you did, please hit like and also subscribe to the channel if you are new here. That's it from me for this one, and I'll see you in the next video. Cheers.